So good afternoon, good morning, good evening, anywhere you may be all over the world. As you all know, we are Position Consulting. We are a professional firm for accounts, for audit, for tax, for CAC, and every compliances that your business needs to stay as a reputable business, as a responsible business, complying to laws of the country as regards to your business. So we have been bringing you a very important video from CAC to tax to accounting to audits and different compliances that are needed by businesses. So in today's video, if you can recall, we've been bringing you the Nigerian Tax Act that will be taking effect from next year, 1st of January 2026. And in this video, we want to enlighten all our viewers, all our subscribers, all our followers, all business owners, entrepreneurs, and professionals in Nigeria and outside Nigeria that have business in Nigeria, the reliefs and the reliefs, of course, that are available in this Nigerian Tax Act that will be taking effect next year. So that's what we are bringing to you. I am Oluwatosin Maja. I'm a chartered accountant. I'm a managing partner of Position Consulting. Please follow me along in this video. And if you have not subscribed, like and share our YouTube channel, please endeavor to subscribe, share, and of course, you can refer us to businesses that need all our professional services. I will be glad to partner and work with those businesses. So I'll be sharing the screen with you on the compliances, the reliefs that are available in this Nigerian Tax Act that will be taking effect from next year. So we have 50 of those reliefs. And of course, it's also an allowance. It's an allowance that can reduce your tax liability. So you can follow us along. Of course, these reliefs and allowances was released by the Presidential Tax Reform Act, Mr. Taiwo Oyedele and his team. So you can see it. So there are 50 exemptions and reliefs. So that can reduce tax liability of individual taxpayer, corporate taxpayer, and most especially small businesses and SME. They can take advantage of it. But before you can take advantage of all these exemptions and relief, you need to be registered with the relevant tax authority, with the Federal Inland Revenue Service, which will be called Nigerian Revenue Service for next year, and then the State Internal Revenue Service. So 50 tax exemptions and reliefs. So this will benefit, of course, masses. Masses are the majority of people. So in the new tax reform laws, which is taking effect from 1st of January 2026, so we'll be seeing all those 50 reliefs in this video. The first one here is the personal income tax or payee. So first one is individual earning national minimum wage or less. So they are exempted. They are not going to be paying any tax. So if your minimum wage is 70,000 and below, you are not paying tax. But that does not mean you will not register for tax. You need your tax ID, your TIN. Even though you will not be paying tax, you still need it as an individual taxpayer. Then we have annual gross income up to 1.2 million, which translates to 800,000 taxable income. So they are exempted from personal income tax or pay as you earn as employee in a paid employment. And of course, for business owner that their business have not really thrived. So you have set a salary for yourself. So you know the kind of salary you are earning, which will now determine whether you are earning minimum wage or above minimum wage. So number 3, we have reduced pay for those earning around gross annual income of up to 20 million. Here, there's a tax calculation table for it, which we have the video on our YouTube channel. You can go back there and watch, or you can reach out to us if you need more enlightenment and education on that. Then number 4 is gift. Every gift item, provided there is an evidence to show that they are gift item, they are exempted from personal income tax. Then we have allowable deductions and reliefs for individuals. So for individual taxpayer, the allowable deductions and relief that they will be enjoying coming next year is first, the pension contribution to PFA. So if you have a pension contribution, the employer where you are working, the organization you are working, the company, if they are paying you pension, of course, definitely from your pay slip, it will, show that you are being paid your pension. So this is an allowable deduction to reduce your tax liability. Then this number 6 under the allowable deduction is National Health Insurance Scheme. So if you are contributing to National Health Insurance Scheme, or you have National Health Insurance Schemes, it's an allowable deduction for you. Then number 7 is National Housing Fund contribution. So if you have that, it's a plus for you to reduce your tax liability. Then interest on loans for owner-occupied residential housing, it's an allowable deduction. So any interest on loans for the owner-occupied residential housing will be taken as allowable deduction. Then number 9 is life insurance or annuity premiums. It is allowable deductions for individual taxpayer. Then we have rent relief up to 20%, of course, of annual rent, or up to 500,000. 500,000 is the maximum you can have as your rent relief or deduction to reduce your tax liability, or 20% of the annual rent will be used to reduce your tax liability. Then we have pension and gratuities exemption. So the pension funds that are assets under the pension reform act are tax exempted. So you are exempted from any pension you received and gratuities that you received. So it is tax exempted. Then we have pension gratuity or any retirement benefit granted in line with the PRA. They are all exempted from tax. Then compensation for loss of employment up to 50 million. So if you lose your job, lost your job in any way, and you are being paid 50 million, it is exempted from tax, except if it is more than 50 million. So whatever is now above 50 million, maybe you are being paid 60 million. So you will now 60 minus 50 million. So it's only the 10 million that will be calculated to pay tax on. Then we have capital gains tax. This is exempted from tax. Sales of an owner-occupied house. So if it is your house and you sold it, you are exempted from capital gain tax. Then you have personal effects on chattels worth up to 5 million. So that is exempted. You have sales of up to 2 private vehicles per year. So if you have private vehicle of your own and you sold it, 2 of them in a year, it is exempted from tax, except if you now sell more than 2. So if you sell 4, it's only the 2 that will be calculated. Tax will be calculated on the profits of it. Of course, it will be subjected to the personal income tax, and the calculation of the tax will be done on it. Then we have gains on shares below 150 million per year. Gains on shares below 150 million per year, or gains up to 10 million is exempted from tax. Then we have gains on shares above exemption threshold if the proceed is reinvested. Definitely, if you reinvest the proceed of your gains on shares, it is exempted from tax. Then we have pension funds, charities, and religious organizations. They are non-commercial in nature, so it is exempted from tax. Then we now come to companies income tax, CIT exemption, which is number 20. So if you are a small companies, so what is the definition of small companies? So if your turnover is not more than 100 million and total fixed assets not more than 250 million, you pay zero tax. So that is a condition for small companies based on what the presidential reform tax have given unto us. This information is from them, and that this is what qualify for small companies: 100 million turnover and total fixed assets not more than 250 million, zero tax. Of course, we are going to prepare your audited account. That's why we are here for you, to assist you with all your tax compliances, to serve as your tax consultant, as your external auditor. You are going to, because if you don't prepare your audited account, how are you going to know that you qualify for this? So it is by preparing your audited account, your financial statement, that you will be able to know. So every small companies will prepare company income tax, which is from their audited account. Then we have 21, eligible label startups are exempted. So if you are a label startup, you are exempted from tax. Then we have 22, compensation relief. That's 50% additional deduction for salary increase, wage awards, or transport subsidy for low income workers. So they are exempted from tax. Then we have 23, employment relief, 50% deduction for salaries of new employees hired and retained for at least 3 years. So these are the conditions under the Company Income Tax Act to be exempted from tax. Then 24, we have tax holidays for the first 5 years for agricultural businesses, crop that are into crop production, livestock, dairy, and etc., among others. So they are exempted from company income tax. Then we have 25, gains from investment in a label startup by venture capitalists, private equity funds, accelerators, or incubators. They are exempted from company income tax. Then we have another heading, development levy. So condition that will make a company not to pay development levy, which is 26. Small companies are exempt from 4% development levy. Remember that development levy have been introduced into the Nigerian Tax Act 2025. So if you are a small company, based on what we have said, a small company is, it will be qualified to have exemption of the 4% development levy. So we have another heading for withholding tax exempt, which is number 27. Small companies, manufacturers, and agribusinesses are exempt from withholding tax deductions on their income. So if you are a small company, manufacturing, agriculture, you are exempted from withholding tax deduction on their income. So withholding tax is a tax that is deducted from the source before they pay you on your invoice, right? But if you are a small company, you will not pay withholding tax. So you will give reasons why you will not pay withholding tax to any organization you are doing business with based on the law, if you qualify as a small company. Then 28, we have small companies are exempt from deduction on their payment to suppliers. So small companies, there will be exemption from deduction from their payment to suppliers. There will not be any withholding tax. Then we have another heading, value added tax, 0% or exempt. So 29, basic food items. If you are buying basic food items, 0 VAT on it. Then number 30 is rent. There's a tax exempt, that's VAT exempt on rent. So if you are renting a house and renting any apartment or anything, and they are putting VAT on the invoice for you, you will tell them based on the law that you are not required to pay tax. Come next year, 1st of January 2026. Then 31 is education services and materials. They are exempted from value added tax. Then we have health and medical services exempted. 33, pharmaceutical products, 0% VAT. Of course, you're not paying VAT on any drugs, medicine, or pharmaceutical products, health in any way, health service, health products, health goods, and all of that. Then small companies, where their turnover is between 0 and 100 million, they are exempted from value-added tax. So you will not charge VAT, you will not receive VAT. But that does not mean that you will not register for tax purpose. You will register for tax purpose, but you will not charge VAT on your invoice, right? So, and they will not charge VAT on your invoice for whatever any other company is doing for you. So on the both way. Then 35, we have diesel, petrol, and solar power equipment. They are VAT suspended or exempt. Then 36, we have refund of VAT on assets and overheads to produce VATable or 0% VAT goods and services. Then 37, we have agricultural inputs like fertilizers, seeds, seedlings, feeds, and livestock animals. They're exempted. Then 38, we have purchase, lease, or hire of equipment for agri purposes, VAT exempted. 39 is disability aids like hearing aids, wheelchairs, build materials. So any disability products, services, goods are exempted. Of course, they fall under medical product or services, they are exempted. Then 40, we have transport, shared passenger and road transport, non-charter. So far is non-charter, it is not VATable. Then we have 41, electric vehicles and parts. It is exempt. Humanitarian supplies, exempt. Baby products, infants, babies, they are not VATable. Then 44, we have sanitary towels, pads, or tampons. They are exempted from value-added tax. 45, we have land and building, exempted from VAT. So we have the stamp duties exemption. So electric money transfer below 10,000 naira, of course, is exempted. 47, salary payment is exempted from stamp duties. 48, we have intrabank transfer. 49, we have transfers of government securities or shares, no stamp duties on it. All documents from transfer of stocks and shares, there is no stamp duties on it. So these are the exemptions and reliefs, two of them that are available in the new tax reform laws, which will be taking effect from 1st of January 2026. So it's good for you to start preparing now. If you have not started your preparation, reach out to us on what you need to do so that you can take advantage of all these tax reliefs and exemption that you'll be enjoying as individual taxpayer and as small companies. So make sure you like, subscribe to our YouTube channels, and reach out to us on all your tax compliances. I will be willing and ready to work with you, to partner with you as a business financial support partner for your taxes, for your account, for your audits, for your CAC, and all your business compliances. Like we have been saying before, it is cheaper to be compliant and it is expensive to be non-compliance. Make sure you get yourself ready before 2026. So I am Oluwatosimaya, I'm a chartered accountant, and I look forward to working with you. Reach out to us on all our social media platforms, on our contacts, on our website, on our email, and subscribe, shares, comment on our YouTube channel, and refer us to businesses. So until we come your way in another video, stay compliant.